The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Now, Darrell Martin.
All right, folks, welcome on back here to the Diagnostic Trading Hour. I'm your host, Darrell Martin, right here on TFNN. Don't forget, you can listen to us anywhere on your mobile phone at tfnn.mobi. Let's check out where the markets are at right now. We have the S&P is currently up about 4 points, just literally is oscillating up and down a few ticks. And I've been doing that for quite a while. So plenty of butterfly opportunities in the flat markets currently. We got the Nasdaq. It's up 3 whole points on the day. Right now we got the Russell. It is up 10 points on the day. And keeps pushing on those highs back and forth, but doing it with really light volume. We got the Dow is up a mere 3 points. We have gold currently at 3.7. And looking on over at silver and copper, they're both down for the day. Silver's down almost 0.5%. But copper is definitely moving down 1.3%. So really shining among the metals there. We got oil is up mere 11 cents. And we have natural gas is down over 2% on the day. Volatile as usual. We also have corn currently down just a few ticks, down $1.25. We got soybeans up 4.5. Euro dollar is currently up 22 pips with pound dollar up 21. Aussie dollar is flying right now with all the currencies there. It's up 72 pips on the day. We got euro yen up 25 pips, dollar yen up 5, pound yen up literally only 2 pips, dollar CAD's up 3, and dollar franc is up 16 on the day. All right, let's see what kind of potential news trades are coming up this week and get a trading plan together. We also had some nice, I don't know if you caught any of that, but we had some great activity last night on the FX markets with the Aussie retail sales number. That came out, not really a tradable news event, not one that I go after, but of course you always want to be aware of the high-impact events just to know when something's going to move. Saw the markets flying up there, and some traders were grabbing a hold of some of that, but also then it just paused and gave a lot of opportunities for some shorts during that brief pullback there. So I wanted to just look at that with you. I was talking to a trader last night, and just on my phone, literally just going back and forth. I was just doing some trades on my phone, and it was pretty cool to sit in there and watching TV and put on a few trades. And so first we'll look at the Aussie dollar, but then we'll hop over and look at the pound dollar and pound yen and just sort of see what all was there. Looking at the Aussie, like I said, we had the retail sales number. It came out at 7:30 last night. So as you can see, got a little pop on it. Like I said, this is not really one that we trade, 63 to 93. But then it just chilled out. And it chilled out. We hop over, we look at some of the other ones. Let's check out the pound. So the pound dollar is where I was looking at for some opportunities on this. And because you get, a lot of times it can be decently volatile. Just the pound's obviously more often more volatile instrument. And so you could have came in here yesterday evening, and while it was just hesitating, there was a couple trades I did. I did one where I went and I sold in the money binaries above the market right here at 59.40, and then I also went in and I sold 59.20s really cheap, and I was able to get in those for like around $90 and buy them back for around 30. So I did some really cool trades right there. Not only the premium collection paying for the out of the monies, actually I got them for $95. Yeah, they're $5 and $5 risk. So on a binary, every binary contract's worth $100 and maximum value. So if I sell for 95, since the max value is 100, I can't lose more than 5 no matter what happens, and I don't get stopped out of the trade. So I went in and did some out of the monies on there. Now I didn't just do the out of the monies. I did the in the monies for premium collection. I was using the 11 o'clock expirations, and like I said, market just chilled out. And I figured there'd be a pullback, and so, like I said, I sold the in the monies, but I also sold some out of the monies to capture some of that as it went down, and it just, it came down, had some nice profit there on my in the monies. They were already closed out, and then had the out of the monies just hanging out there. Again, they were covered. So, you make $20, $30 on your premium collection. Only had $5 risk on this one. Now, of course, I'm doing more than one contract, but you go in and sell those and they fly down, and so I take some profit. Could have made even more, but I was like, hey, that's a nice move. It moved right back down to that low. Time to close it out. It did one more nice, huge spike, and then came back up, and then there were some opportunities on the 59.20 on the way back up that I was able to take advantage of. And that was just sitting down for, 30 minutes to an hour, maybe, at most. I had not in front of my computer, down there in the living room, just, like I said, hopping on my, let's see what I have now, Note 3. I had an iPhone before. So on my Note 3, just placing some trades. And was hopping back and forth between Thinkorswim, using it for charting, and I was hopping over to Nadex and using it on the Nadex app and using it for placing trades. So I have two good apps for trading. I recommend every trader have. And if you don't have a Nadex account yet, okay, simply hop on over to TFNN.com. And right here you'll see Nadex. Click on that Nadex banner, and then to get a demo trading account, go to Trading, and then go to Demo Trading Account. Make your username really short if you have an Android phone, because if you have a long username, it'll be hard for you to log in if you want to log in on demo, because they limit the characters. I know it's a bug they're working on, but keep it as short as possible, because you got to put demo dash in whatever your demo username is. So keep that number that short. Now, if you have an iPhone, I've never had an issue, but just an FYI. And then on your personal details, put in your first name, last name, phone, and email address. Click Apply for Demo. They'll send you a password. This takes about 15 seconds, and you'll be able to log in. And so you can start doing some of these nighttime trades, low-risk trades, higher probability trades. You can start doing, breakout trades, range trades, news trades, on down the list. Different trades that I go over here on the Diagnostic Trading Hour that we look at and set up. And then when you're ready for a live account, click on Create Account. And it takes about 5 minutes to go from start to funded. The funding requirement's only $100. Obviously, if you're live trading, you're probably going to want more than $100 in there, but that is the minimum funding requirement, and a lot lower than a lot of other accounts, so it's a lot easier for you to get started. And that gives us a quick wrap on that. And while we're doing that, I'll throw up some deviations. We're going to go through and look at the deviation levels for the day. We post these inside the diagnostic members area here on TFNN, and you just go there. What will happen is it'll load them up and show you what the deviations are for the day. So let's check them out. Let's see where the markets are at, where they're bouncing around. And we had some gap fills on a couple of the indices. The S&P got close enough that you could have considered a gap fill, but just right there, very, very close. So we're looking for just to get a little bit tighter on that one. And it looks like it's still going to push down. I don't think they're done pulling back for the day. But let's pull it up and walk through these charts. And I guess while I have the pound up, we might as well do a quick summary of it. And you can see the pound went over here, and if we measure, this one thing that's always good to do, measure that one deviation, okay? So we got 75 pips, and then measure the low right here all the way up to the high. Look at it, bounced right off that 0.7. That 0.7 was also a 1 deviation move, okay? So that's really helpful to know that, to know not only did you hit the 0.7 deviation level, but you also hit a 1 deviation. 75 pips was 1 deviation on pound dollar today. That number changes every day, okay, of what a deviation is. And I'm not using standard deviation, such as using historical volatility. I'm not using pivot levels and things like that. I simply use the implied volatility and the underlying markets options. And it's basically, if there's thought that there's going to be a lot of movement, people buy more options, and therefore the deviation gets wider because it makes the options cost more money. And so you can extract that implied volatility out, tie it into a formula for statistical deviation moves, and use it. But the cool thing is you don't have to do any of that math. We do it all for you and just plot the levels directly right here for you, and then you can just go in and stick them on your charts. So on the pound dollar, like I said, moved on up there to 0.7 before doing a pullback and hovering right there. But let's go in, let's look at some of these indices, do a little bit of analysis, see where they're all sitting at right now. So the NASDAQ right now is sort of the big one waiting down, but we'll look at all of them. We got the S&P, and it moved on up, really didn't come back to that settlement price. See that? Up to a half deviation. It's tried several times, and then it's rode up higher and higher and higher on lower volume, and looks like it may actually start to finally do its move on down here. So we're sort of moving in the latter half there, the lunch hour. Some traders getting back. And hopefully we'll start to see that move on back. We get that back, then we're going to have that gap fill. And a gap fill is the difference between where the market settled the previous day, so on Friday in this case, and where the market opened on the pit hours at 9:30 a.m. So that difference is the gap. And I do gaps on there's a few different ways I do them. But whenever I trade them on indices, I trade them, I can trade them any day of the week, and I can use the binaries. And I'll use the 415s to give myself plenty of time to allow that market to come back. Sometimes they'll come back fast, and sometimes it'll take a good chunk of the day. So I'll use the 415 contracts. I'm looking for a close to 1-to-1 or better risk reward. And so today I hopped in on a few of these, and let's see here on the S&P. Let's see, I got in on the 1755s. So just right there above the settlement price of the S&P. And I'll look at other things too, just to see, any possible resistance points, to know, hey, do I expect the market to bounce at a certain point? And I was looking at this right here. We got sort of this volume level, and I went back, and I was like, so what price was the market at that, that same point? I go over here, and I'm like, okay, well, this is also where we had a big volume spike. It wasn't able to push through higher on the volume, so we're really going to need some additional volume to break down below this big up spike we had over here, this little pullback. So I'm hoping right here, I'm looking, for that, but I'm also using defined risk, so I'm not just like, buying or selling and hoping. I'm actually using risk management with a plan. So I think it's going to go back to 1755. I don't have to hold it till expiration. I'm not waiting until expiration for it to get back there. If it gets down to that price, I'm getting out of the trade. So, and so far we got to a low of 1756. So that puts us like 1.25 points. So pretty close to where you could actually consider a gap fill. You could have closed pretty close to there. I was looking for just a few more ticks on that. And we'll see if that one closes out. The other two did really well. Waiting on small cap still has a long way to go. But we'll see if it can, like I said, push on down. It's just been this relentless battle with continuing declining volume that's been going on since about noon. So for the last hour or so here, we've had a whole lot of nothing happening over on the S&P. Now let's go ahead and check out the NASDAQ. And on the NASDAQ, let's look at this one. Let me pull it up for you. There we go. And we got the move on up. I mean, it went up pretty strong this morning, up to half deviation, and it just ran down. And if you were on this thing right away out of the gate, you could have had a great trade. If you waited at all, you missed out on the NASDAQ trade because it went so fast. To get that 1-to-1 would have been really tough. But it flew on down there, and I mean, just perfect. And that's one thing, one of the traders that I do a lot of gap trades with, and he's been really pointing out a lot, is the NASDAQ just seems to close that gap so fast compared to everything else. And I mean, even look at, right here last Friday, just bam, right down there and just nailing it. And so, sort of, if it keeps it up, it's going to become a favorite indice for gap fill trading just because it keeps going so fast on those gap fills. But I usually spread my risk across multiple indices. But looks like NASDAQ looks like it might want to push through and make a new low on the day. We got a few ticks left to go. All right, stay there. We'll be back after this break.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks, we're going back here to the Diagnostic Trading Hour. All right, so let's check it out. We got the Dow right here, also sitting right around settlement. And trying to push down. So did a little spike up there. Didn't really get a lot of momentum on that. Looking like it's pushing down. So like I said, we may start getting a pullback here into the end of the day. And I'm still looking for ES to come on back, but we'll see what happens. And and then the one other one we got, the Russell, which has been really the leader of the indices today. So this is one of the reasons I like to diversify my risk among multiple indices, is because I can go in there, and if one of them does happen to just go counter everything else, and like the Russell decides to fly up despite other things going down, then you're okay. And now I do have like some hedges on. I'll put stuff like a little bit higher that's really cheap, just in case, and I'll put on just a few. So let's say I have let's say I have $100 risk that I may put on just a couple ones above it to more than cover the cost of that trade in case it does just fly the other direction. But we'll see what happens on that one. But I mean, it's just really hanging out right here at this top. And I was going back, I was looking over at the volume from yesterday. We had this volume spike up right here, pretty much the big spike up we had on the day, and we went in right there. And you can see this, just to give you a comparison of volume right there. So right here, that high, basically you can call that the magnet price. And so market fell on down, went right back up to that magnet. It's been like right on it, oscillating around it. But also when it fell down, okay, we had this big volume spike right here on this down low bar. And so the main target at this point would be right around settlement. So see how it just like came on right down in there? And of course that is right now the end of the day. So that explains why that's at settlement. But that also was the big volume spike on the way down. So basically, you come in the morning, those are really your two target prices, just looking at those two big volume spikes on the up move and the down move of where it's going to go. So it ran on up. We'll see if it runs back down or not. That'd be a pretty big drop this late in the day for that to happen. And we're not talking a massive move on the S&P. Just a few points there, but we are talking a pretty decent drop, solid, what would that be? 10 points there on the Russell. So it'd have to give up all the day's gains. And, but I mean, who knows? There's always politicians. They may come out and give us a nice announcement and make the thing drop. So, no deal, whatever. But, so yeah, we'll get that drama soon enough. But, it's sort of nice not having to hang on every single word from every politician that's been happening lately. But sort of funny, you look at stuff like this and you want something to move and you're like, where are the politicians when you need them to add some volatility? But anyways, so that's where we're at right there on the Russell. It's sitting up at 0.7. If it does move on to one deviation, that'd be 1105.8 would be the next target there. And not really even seeing volume spikes on it right there on the 10 minutes. We can go over, we can check out the 15s. And that really is usually your biggest key for, the market about to turn around. And we haven't really got one there. And we can also check out the 5 minutes. Of course, you're more likely to see them just because the bars are smaller. So, you'll basically, since everything's not included, you'll be more likely to see a volume spike. But we didn't get one as well on TF. It's just been slowly but surely trending without any volume spikes, and to give us that big key for a reversal. And the closest one we got, you could say, would be like right here. You can look in here, and it's not an exact one, but we got 758, we got 1288, so it's not quite double. But you do see a bit of a volume spike right there, and it bounces off the 0.5 deviation. So it sort of comes back down and bounces off that. So when you see those volume spikes, do look, or, don't be surprised when you see a bounce in the market. Let's go and let's check out some of our currencies and scroll through those. Like I said, we went through the Aussie dollar. We were talking about the retail sales. Well, let's look at the deviation move on that for the day. It's really been the clear winner of the day as far as how far it's moved compared to the other currency pairs. And we got to move all the way up, solid one deviation move on the day. And most of that happened, of course, obviously, late last night with a little bit more happening there during the Asian session and really not much of anything today during the U.S. session. We hop on over. We'll check out the Euro-Yen. And on the Euro-Yen here, we can go in and see moves on it. Like I said, we had some decent, yen moves. I was focusing more on the pound last night than I was the yen when I was doing my trades on Nadex. But it just it's really, it's a choppier. I mean, you can just see like the chops up and down. But just some nice flat moves that you can, of course, hop in when you see this flat market. It's like we did last week. We were talking about this last week. It's the time to hop in and start looking at butterflies and things of that sort. Let's check out the euro dollar. And on the euro dollar, let's see here. It's just taking, I don't know why, but every once in a while it'll be slow to load up. But we'll pull that up in just a second. But it's got a little bit of strength in it still. And dollar definitely weaker compared to the euro across the board. But a nice one deviation move from low to high, negative 0.5 up to 0.5 on the euro dollar. Derek there will be back after this break.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Andy Hecht, the host of the Commodities Hour, recently launched his newsletter service, the Technomental Commodity Report, and only 6 weeks in, Andy has already recorded a triple-digit winner. Andy advised his subscribers to purchase a long-term call option at 46 cents on July 11th, and then sent out a special update Friday, August 16th, advising his subscribers to close that position at $1.40. That's a 204% profit in just 5 weeks. The Technomental Commodity Report by Andy Hecht is released each Thursday morning, and right now you can get a month-long free trial to this subscription while locking in the low introductory rate of only $39 a month. Andy Hecht has been a commodities trader for over 3 decades. Let his experience work for you. Sign up for your month-long free trial to the Technomental Commodity Report today at TFNN.com. Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, welcome on back here to the Diagnostic Trading Hour. So just looking at Eurodollar, I said it was a 1 deviation low to high move right there on the Eurodollar. Went down to 0.5, bounced right off of it, down to negative 0.5. Bounced right off of that, ran on up within a couple ticks of 0.5. And so, like I said, 1 deviation move. Good move there on the Eurodollar. Just, again, most of these moves last night took place right around 8 o'clock or so. And then they bounced on back. You had a nice run up. And then it's just been pretty choppy, good chunk of the day. Looking on over at the pound yen, seeing where everything's sitting on that. And they'll usually be somewhat in lockstep with each other, but you usually get a little more volatility there in the pound yen than you do in the euro yen, which can be good and can be bad depending on how you want to look at it. But it kept that strength because that pound was, like I said, it had that one dip right there around 8 o'clock, but it pulled on back on it against the yen there, and just kept moving higher and higher, and it broke the half deviation level, but it never did drop. Usually you get more volatility. It actually did not drop in this case. But you can just see this constant up, down, up, down, up, down going on. And, again, a little bit challenging to trade, but good for things like trend trading at premium collection. And go on down here to, let's look at a couple other pairs. We'll get dollar CAD, dollar franc, and dollar yen. So after we wrap those up, then we're going to hop on in and check out the news for the week to get us going there. So on the dollar CAD, we got... move on down to 0.5, bouncing perfectly off of it this morning. and doing a reversal for you. And, of course, don't forget, you can always use those volume spikes using the futures volume whenever you're trading the Forex spot market, or if you're trading the Nadex Forex, which follows Forex spot, you can still use the futures, like 6C, to be able to compare the two together and look at the volume analysis on that, so that way you can have some volume with your FX to help you call those reversals. Dollar franc, it did a little spike right there when the dollar got stronger last night, and it gave it on back up. Dollar's been getting weaker pretty much ever since right there against the dollar franc. And one last FX pair, we got the dollar yen. So on dollar yen over here, we got a, let that populate through so that y'all can see it. But we got a whole lot of nothing. So very flat pair. You sort of see almost a carryover there from the pound yen where it sort of moved up, and that was about it. Just a lot of just flat oscillation. Of course, is due to, your economic calendar. You want to be aware of what's going on. Why would maybe that be done? Well, because they had, their bank holiday, right? So they had a culture day. And so that sort of spills over in today before they wake back up this morning. But so since they had the holiday, which, like I said, carries over into our day, which is their nighttime, then that, of course, made the yen super, super flat right there. Okay, so now that we've wrapped that up, let's look at what we got coming up and see if we can put together, a couple ideas, trades, plans. Let's see, the next major announcement we have on the roster is going to be the Aussie interest rate is going to be coming out tonight. That one's a little bit interesting, okay, so to say the least. Let's see the release time for the Aussie interest rate. And make sure, of course, you've obviously turned back your clocks there. But it's going to be 10:30, okay? So Aussie dollars coming out at 10:30 tonight. And there is usually not a massive move on the Aussie dollar. So usually you get maybe around 50 pips. 67% of the time it will hit 50 pips, but the average range is 45. What does that tell you? If 67% of the time the market moves 50 pips or more, but the average range of all of those is less than 50. What that means is you have a lot of really small moves. Okay, so out of the 3% that don't move 50 plus pips, they barely move at all. And so there are different ways to use this. One of the things is to be aware the market is really flat leading up to it. Okay, so don't be looking for some big, massive Aussie moves tonight. Leading into it an hour and a half before the announcement comes out, so starting right around 9 o'clock. You get about a 17-pip high to low on the Aussie. An hour before, you got about 15 pips, and 30 minutes before, you got 10 pips high to low on the Aussie dollar. So if you're looking at the Aussie tonight, expect a whole lot of nothing happening right there in those couple hours leading up to the interest rate coming out. Just sort of like here, things usually get very flat and quiet coming into an announcement. Right there around 10:30, of course, you should see, a decent little spike move, and that's where you get that 50 pips. But again, the high to the low is only 45. So if you can find a really cheap straddle, all right, so, you're talking $30, maybe a strangle, but most likely a straddle, then you can check it out. I've even sometimes seen that there's so much implied volatility in the market, okay? I've actually went in on some of these, and I've done what is known as a iron condor with the Nadex spreads. It's where I buy the lower one and sell the upper one, because, literally I was able to get like 50 pips wide. And there was so much premium built in, and it's just not a big mover. So I was like, hey, if I can get, that, then, that's a great way to trade that. So just think, there's a few different ways to trade it. Again, not our greatest straddle, strangle, not as straightforward as a lot of the other news announcements that we get. But let's also get you ready for early tomorrow morning, because we do have a couple things that are on the roster that you can use. And one of those is going to be Britain's PMI numbers coming out. And that number, let's see here, we pull it on up, is expected to be released at 4:30 on Tuesday morning, and Eastern time there. The forecast is 60.4. Okay, so they're expecting to come in at 60.4. If we get off of that forecast by about 2.5 points, so 62.9 or 57.9 there, if we get off by that, then we're expecting a big move. All right, so if it's higher, of course, we're expecting the pound to go up. If it's lower, we're expecting the pound to go down. And the range is actually usually pretty decent but the average move is not as good. So this one, again, we're going to look at pound yen has a higher percentage of breaking 50 pips, so it's closer to 60%, but the average range is 74. Okay? So if you go in, just keep in mind that a small amount of them, like 50, almost 60% of those, only hit 50 pips. But when they do, they hit it huge. All right? So, whereas on the Aussie dollar one, we were talking about how the average range was lower than 50. Even though it does hit that, like it was only like 45 pips, even though we had a higher percentage rate of it hitting 50 pips. So in this case, a lot of them hit a higher range. They exceed that number when they exceed it. And so your probability of getting at least 50 pips is pretty decent on the trade. So keep that in mind. Even though our average range high to low is 74 pips, you really want to stick as close to that 50 pips as you can on this report. I'm just going to go the exact same for the pound dollar. The average range high to low, though, is 60 pips, and it only hits 50% of the time. So not the strongest numbers, but ones that you want to look at. Just have really low risk if you're straddling or strangling that report. That's going to come out again at 4:30. And again, if the numbers come in like right at expectations, if they don't come in like at the deviations there, within 5 minutes or so, you're probably looking to figure out how to take profits to get out of the trade at close to break even. Okay? So you can do that on pound dollar. You can do that on pound yen. Pound yen, again, having a little more volatility built in, usually whenever the PMI number is released. And let's see, we have one other trade that's going to be coming up tomorrow morning before this show here, and that's the ISM non-manufacturing PMI. The U.S. ISM non-manufacturing PMI is a report that will be released right at 10 a.m. Now, this report does not have any really great stats on breaking out. Okay? So it's not really necessarily your greatest straddle or strangle strategy. You can try some butterflies on it. The only, let's see, I'm just looking across the pairs. Maybe dollar yen, but Aussie dollar is usually the flattest one, actually, leading into it. So if you can find some good butterflies, 30 minutes before the report comes out, you have about a 15 pip high to low in Aussie dollar. An hour before the report comes out for the U.S. ISM, you have a 25 pip high to low. And 90 minutes before the ISM report comes out, you have a 30 pip high to low in Aussie dollar. So you'd be looking for a range trade within that high to low number right there. Ideally, either you want to get it as wide as you can and take a stop, or you want to get a 1-to-1 trade that's closer without taking a stop, expecting it to stay inside that 30 pip range. So it's a little bit of a process. You learn how to do it over time. Definitely demo trade, so you're not paying to learn. Okay. And it's a lot cheaper. It's frustrating because when it works out really well, you see all this money you could have made, but also it's easy to forget when you're demo trading and you lose how much money you saved by demo trading. So I always recommend people hop in, demo trade these, work on them, start tracking your stats. How did I do on ISM? Because I need to look at ISM each time I trade ISM. How did the last report turn out? So you want to go back and just really start building that catalog, even with the stats. It's good to sort of know how does it react when it's above it, when it's below it, when it's off by the deviation we're talking about, when it's not off by it. Are there any deviation levels that can protect me on a butterfly or that would hinder me on a straddle or strangle? So there's a lot of little things to look at, but if you'll just hop in and start playing it, it's easier than it sounds, but it's not as, it's funny, it's easier than it sounds in the sense of, you're buying and selling and that's it, okay? Put it, take profit. But it's not as easy in the sense of, you want to have a little bit of thought process of don't just put it on and forget it. If the report comes out and it comes in at expectations and you're straddling or strangling, look to get out as close as you can to break even. If the report comes out and it explodes, but there's a pullback for you, and you're on a butterfly and it was like way up by the deviation, but it flew up and came back down and you have a chance to get out of that trade, get out of that trade. But we, are doing all different kinds of trades. Some of them we're able to do right here live on the air, which is fun. But I just like to give you the ideas, know what to do, and we go back, we do recaps on them. And, check out some of the past shows. I'll go through and I'll recap, step by step on the trades. And we'll go back and we'll look at some of these and see if there was some good possibilities. I know we're going to have a big report at the end of the week, but let's see what else we got. We got the Canada IVPMI coming out the following day on Wednesday morning at 10 a.m. And obviously, dollar CAD would be the trade for that. And you can even, I would use a lot of caution on trying to go in and do dollar CAD butterflies before it. It's about a 25 pip high to low 30 minutes before. So if you can pull that off for the 10 a.m. expiration, that'd be impressive. but only 33% of the time does it break 50 pips. So it may be a better binary butterfly into the news where you're not using any stops, you're using good risk reward, or ideally decent risk reward. But usually we don't get a massive move off the dollar CAD PMI. So that could, like I said, only two out of 3 times it doesn't break 50 pips. So if you can get a good range, then that'll help you out quite a bit on that report. And let's see here. I'm just trying to go through. We're going to have the European interest rate. Now, when the interest rate comes out, it usually doesn't mean much of anything, but the press conference is where all the big money is, okay? And so that one is going to come out a little bit later in the week on Thursday there. And let's see here. Also, the British interest rate coming out that same day. But the EU press conference is at 8:30. Also, we're going to have the advanced GDP, one more yet delayed report from the government shutdown. But the advanced GDP will be coming on out. And so what are the numbers that we're looking at on this? We're looking at your best things being euro dollar, euro yen, easily against everything. And they both have almost the exact same stats. Okay, so either pair, you may look at both to see which one's better priced, but you're looking at almost 85% of the time they break 50 pips with a little over 75 pip range, high to low. So you're looking at about a 45 pip max risk for doing a straddle or a strangle on those trades. Of course, as you know, I prefer the straddles, but if I can't find a good one, I will look at the strangles as well. And again, that report comes out at 8:30, and it does take about an hour for that press conference. Okay, so don't mix up when the interest rate comes out at 7:45. Don't forget the press conference is usually the big mover, unless they surprise the market with an interest rate change. But there's no expectation that they will. But the press conference is the big mover. It comes out at 8:30, and that can go on for like an hour or so. So you're definitely probably going to be looking more for the 10 o'clock or later, 10, 11, maybe even 3 o'clock expiration contracts. Draghi is also going to come on and talk at 2, but anything that he's going to say at the press conference is, I don't think he's going to release any new news a few hours later when he does his other press conference. Now, as far as the one for Britain, they're going to release their interest rate decision. And let's see here. We're getting about 80% of the time it moves 50 pips on pound dollar and pound yen. Pound dollar is like 85 pips high to low, whereas the pound yen is a little over 90 pips high to low. So those are going to be some great trades. So check those out, and that's within 2 hours of the report. So check out definitely the Britain interest rate, the ECB interest rate press conference, okay, and quarterly GDP, of course, on the U.S. coming out at the same time. Let me see if we have any stats, because that's a little bit unique. I have that number being released at once. And basically it's just going to add to our volatility on our pound dollar, euro dollar. And I wouldn't really try much of anything else out, because the stats on just the GDP alone would be good if we didn't have like the interest rates coming out on the euro and on the pound that same day. But like dollar yen, usually whenever the U.S. GDP comes out, it barely ever moves. Okay? But the dollar's going to move a lot, because we got the pound interest rates, we got the euro interest rates coming out. Therefore, I wouldn't do a lot of the normal GDP trades that I'd normally do, simply because, like I said, they changed the schedule. I'd focus more on the regular stuff, which is the interest rate announcements. All right, stay right there. We'll be back after this break.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors, such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Basil Chapman has just announced that he will be hosting a one-day online master trader class. Friday, November 8th, Basil Chapman will teach you the essential fundamentals he uses when trading the market with his Chapman Wave methodology. Included in this full-day online master trader class is 1 month of Basil's daily newsletter service, The Opening Call, a $128 value, as well as a copy of his CD book, Introducing the Chapman Wave Methodology, which usually sells for $249. Join Basil Chapman for this powerful one-day online master trader class Friday, November 8th, which will be archived if you can't attend live, where he'll give you a complete understanding of the Chapman Wave methodology and how to apply it to profitably trade any market in any time frame. For all the details and to reserve your spot while taking advantage of early bird pricing and saving $200 off the regular price, visit the front page of TFNN.com today.
Have you subscribed to the Gold Report yet? On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.69% profit to an incredible 48% profit in just one equity. Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began. And right now, you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber as this volatile gold market makes its way back into positive territory after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial today by visiting TFNN.com.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, folks, we're going back here to the Diagnostic Trading Hour. So again, just to reiterate, the U.S. GDP usually being a number I would trade, but I'm not so much going to focus on those stats because we have the euro dollar and the pound dollar interest rates coming out, or not the euro dollar, but the euro interest rates and the pound interest rates coming out, and so that's going to, of course, have an effect on FX. So obviously the GDP should just help, make that impact bigger more than anything else. All right, so we have, I want to say, one other big news announcement time for the week, and that is going to be on Friday, where we have the Canada employment change and the non-farm payroll. This, a lot of times, is one of my favorite ones to do. Now, I will warn you, a lot of times it can be expensive, okay? You'll go in just because there's so many announcements, but on Friday, what's going to be happening is Canada's going to release their employment change number, their unemployment rate, their non-farm employment change number. The U.S. is going to release its unemployment rate, non-farm payroll, that stuff. It's going to release average hourly earnings, core PCE price index, personal spending, personal income. So all those numbers coming out of the U.S. and Canada at the same time add to a lot of volatility. And I've literally seen 2 deviation moves on this thing within a matter of less than 30 minutes. So it can be one of my favorite ones, but it is more expensive. So it's a little scarier to trade because you're risking more, and but you're really expecting on just a massive, massive move. And and it's only when all of these come together at once. Now, the average move on the US CAD is 80 pips, okay? And especially when you add in all these announcements together, 80% of the time it breaks 50. Now, over on the NFP report, you're going to have the average moves on several pairs. Aussie dollar is like 60, but 83% of the time it breaks 50, so you can see why I'd prefer USD CAD. Euro dollar is massive. Usually it's actually 100 pips, and it has broken 50 pips 100% of the time in the last couple of years on the NFP. So it's also obviously a very viable option. Pound dollar, a little over 100 pips, 87% of the time it's breaking that, so it can be a great one. We got the dollar CAD, covered. Dollar franc is the biggest one, usually the main one I focus on. We were cleaning up on this when I was showing this, I think the last NFP. I was doing this and I was riding the dollar franc. I mean, we took it huge. But I was doing euro dollar, I did pound dollar, I did dollar franc. Those are the three ones I focused on, but it was just NFP. Okay? So dollar franc, almost 110 pips average move, and over about 88% of the time it's breaking 50 pips. So what I like to do is I like to combine together. I'll actually use a trade euro dollar, pound dollar, dollar franc, and dollar CAD. I'll actually be trading all four pairs at the same time on Friday morning. So those will be my my big picks for doing those trades to help get you all set and taken care of. But that really is going to be your new trading calendar for the week. Hope you took notes on that. We'll be going over that again some more tomorrow, just to reiterate it and ensure you have it down. But lots of straddles and strangles on Thursday and Friday that you can go in and do. And let's check out where we're at right now on the markets. We got the S&P. It's decided to tick back up a little bit, so it's up 5.5 right now. We'll see how it ends out the day. And we got the NASDAQ up 2.75. Russell is up 11.5 on the day right now. We got the Dow up 18. We got gold up $1.80. Silver is down almost 1% on the day now. Copper pulling back a little bit, but still down over 1%. Oil is up 24 cents. We got corn and soybeans basically flat on the day, not doing much of anything there. And I mean, I guess it's up 6 points, but nothing major. But big mover again, being Aussie dollar. Cool. Hope y'all had a great weekend, and look forward to y'all having a great trading week. I'll see y'all tomorrow right here on the Diagnostic Trading Hour.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.